Welcome to ICAN Academy YouTube channel. In this lecture, I want to examine accounts of non-profit organizations. If you are coming across my lecture for the first time, please like the video and also share it with others. If you are a returning subscriber, I say thank you for being part of this channel. Non-profit organizations are those organizations whose motive is not to make profit. Those organizations whose motives is not to make profit, but to render services to the public. Their aim is to render public services to the public and not for profit maximization. Examples of non-profit organizations are social clubs such as Rotary Club, political parties, churches, mosques, professional educational institutions such as ICAN, ACCA, ICAG, etc. Since these organizations are established not to make profit, but to provide services to the public, how do they generate income? So, sources of income of non-profit organizations. So their source of income include members subscription, fines, donations, special events, proceeds from special events such as annual feast, annual dinner. Then we also have let's say annual dinner dance. Then we have raffle draw, etc. These are some of the source of income. Then we have bar trading. These are the sources of income of non-profit organizations. What are the accounts required? Accounts required by this organization. Number one, we have statement of affairs. Statement of affairs. This statement is prepared to ascertain the accumulated funds for the period. It is prepared to ascertain the accumulated funds. So, accumulated funds is total assets, accumulated funds equals to total assets less total liabilities. Total assets less the total liabilities. Statement of affairs, if you have watched my earlier video on accounts of non-profit organizations, I've told you that statement of affairs is the carbon copy of the statement of financial position. That means it's a replica of what you have in the statement of financial position. So when you have your assets, so statement of affairs, So to prepare it, you have the assets. The assets you use must be the one contained in the opening entries or opening balances opening entries or opening balances. So the assets in the opening entries less liabilities. That is the liability contained in the opening entries or opening balances. So assets less liabilities will give us the accumulated funds. I've given a comprehensive explanation of all these concepts in my earlier videos. Number 2, we have the receipts and payment account. Receipts and payments accounts. This is equivalent of the cash book of the trading firm. Receipts and payment is equivalent of the cash book. That means it is the carbon copy of cash book of a trading organization. So it is receipts and payment account that replace the cash book of a trading firm. You have your revenue or receipts at the debit side. Debit side contains the receipts and credit side contains the items of payments. The difference or the balance in the receipts and payment will represent the cash in hands or cash at the bank. Number 3, bar trading account. Where the club or society engage in restaurant operation, then you will need to prepare the bar trading account to ascertain the bar profit, or loss. So my next video on accounts of non-profit organization shall deepen into this, or I will solve questions that involves bar trading accounts in my next video. Please make sure you subscribe so that you don't miss my upcoming videos. Number 4, income and expenditure accounts. This is equivalent of statement of profit or loss, of a trading organization, or is equivalent of trading profit and loss account of a trading firm. This account is prepared to ascertain the surplus or excess of income over expenditure. Surplus is the same as the excess of income over expenditure, or to ascertain the deficit of the club or society. Deficit is the same as excess of expenditure over income. Then number 5, you may be asked to prepare statement of financial position. All these have been explained in my earlier videos. Keep watching.
ATS 1 March 2025 question 5. The following is the receipts and payments account
of Oloibiri Social Society for the year December 31st, 2020. Receipts and payments for the year ended December 31st, 2020 amount in 1,000 naira. The debit side we have balance brought down 3,075. Subscriptions for 2019 we have 120. 2020 6,330. 2021 240. Restaurant profits 4,650. Investment income 3,000. Total of the debit side is 17,415. Credit side we have salaries 6,240. Stationery 1,200. Rates 1,800. Telephone 300. Investments 3,750. Sundry expenses 2,775. Balance carried at 1,350. Total 17,415. Remember, this receipts and payments account is for the year ended December 2020. The subscriptions, the year in question is 2020. The subscription of 2019 was the subscription that was not paid in the year 2019, and it was received in the year 2020. This subscription was made for 2019. That means it was in arrears in 2019. It still remained outstanding in 2019. It has not been received as of 2019. That subscription was not meant for the year 2020. It is meant for the year 2019, but was received in the year 2020. It is because it was received in the year 2020 that subscription was included in the receipt and payment for the year 2020. So the subscription for 2021, which is 240, is the amount made for 2021. Remember, this receipt and payment is for 2020, but this subscription was received in the year 2020. That is why it was included in the receipt and payment account for 2020. So under normal circumstances, since these two subscriptions were not made for the year 2020, the year in question is year 2020. Since the two subscriptions, that is the one for 2019 and 2020, was not made for the year 2020, it is not supposed to be included in the income and expenditure account for the year 2020. So that means when you are preparing the income and expenditure account for the year 2020, the subscription for 2019 and 2020, 2019 and 2021, which was received in the year 2020, will have to be excluded from the income and expenditure account. We have to remove this, the one for 2019 and the one for 2021. You have to remove them from the income and expenditure account. So in order to show the amount that is actually made for the year 2020 in the income and expenditure account for the year 2020. The following information is also available. Note 1. There are 450 members, each paying annual subscription of 15,000 naira. So if there are 450 members and each of the members were paying the subscription of 15,000, so you have 450 times 15,000. That means the subscription due for the year 2020 is supposed to be 6,750,000, but the amount received was given, the one for 2020, it was given to be 6,330,000. That means certain amount of subscription for the year 2020 were due but not yet received. So that is subscription in area. So, and that will be added to the amount made for the year 2020 to be included in the income and expenditure account for the year 2020. Note 2. Inventory of stationery at December 31st, 2020 was 150,000. This is December 2020, and the year end is December 2019, and the year end is supposed to be December 2020. So that means the inventory for December 2019 will be the opening inventory. And at December 31st, 2020, so it was 270,000. So the inventory of stationery, the closing inventory is 270,000. Note 3. As at December 31st, 2020, the rates were prepaid up to March of the following year with annual charge of 1.8 million. So the rate was prepaid
That means rate was paid in advance. Since it was not meant for the year 2020, the amount meant for 2021, which was paid in the year 2020, you have to exclude it. You were to, as at December 31st, 2020, the rates were prepaid up to March. That's to show that the rate you were given was a rate of 15 months. You know, the year 2020 is 12 months. March of the following year, you have January, February, March. Make it 3 months. 3 plus the 12 months in 2020. That is 18 months. If you check your receipts and payments account, you see the rate of 1.8 million there. So, and that is the amount they were referring to here of the following year with annual charge of 1.8 million. Note 3, as at December 31st, 2020, the rates were prepaid up to March of the following year with annual charge of 1.8 million. If rate was prepaid up to March of the following year, that means rates of 3 months were paid in advance. So 3 months rate was paid in advance. So that means the amount included in the receipts and payment account will contain the rate of 3 months which was prepaid. And annual charge is 1.8 million. The rate for a year is 1.8 million divided by 12, 150 per month times 3. That means 450,000 was prepaid. You know, the 1.8 million was given in the receipts and payment account, the credit side of the receipts and payment account, as the amount paid for the year, for the period. So the 1.8 million given contains the rate of 450, which was paid in advance. So the one paid in advance will be recorded, expenses prepaid will be recorded as current asset. Since it is an expenses prepaid will be reported as current asset. Under normal circumstances, the rate that is meant for the year is supposed to be 1.8 million. And since you were told that 450,000 has been prepaid, has been paid in advance, that means the amount meant for the year included in the amount paid, the amount meant for the year in the amount paid, supposed to will be 1,350,000. That means 450,000 rate was also in arrears for the current year. So when you get to current liability, the outstanding rate of 450,000 will be shown as current liability. Then you have current liabilities of 450,000. Then you also have prepaid rate of 450,000 as well under current assets. Note 4. Accrued telephone expenses is outstanding. The amount accrued being 105,000. Sundry expenses accruing at December 31st, 2019 was 210,000. This is the accrual. So you were told the accrued telephone expenses is outstanding. You have an outstanding telephone. The amount accrued was 105,000. And if 105,000 is accrued at the end of the year, it means this 105,000 is meant for 2020, but remained accrued in 2020. That is, it hasn't been paid in 2020. That means we need to add this to telephone expenses that will be reported in the income and expenditure. This will be added since this is meant for the year. Why sundry expenses? Sundry expenses accrued at December 31st, 2019 was 210. This is meant for the previous year, not for the current year. So in that case, since it was outstanding in the previous year and it has been included in the sundry expenses page for the current year, you will subtract this one from the sundry expenses for the current year. So it will not be added. Don't believe that accrual will be added. This one will not be added because it is not meant for the year 2020. It was meant for 2019. That is why this amount will be subtracted from the sundry expenses that will be reported in the income and expenditure account. Note 5. At December 31st, 2019, the building stood at 30 million. You know, December 2019 relates to the previous year. The current year is 2020. That means this relates to the opening entry. Stood at 30 million naira in the book. And it is required to write off depreciation at 5% per annum investment at December 31st, 2019 was 60 million. You are required to prepare one accumulated fund as at January 1st, 2020. Two, income and expenditure account for the year ended December 31st, 2020. Three, statement of financial position. Now, let's have the solution to the question. The starting point is the Roman figure 1. You have to prepare the accumulated funds as at January 1st, 2020. It means you are going to prepare statement of affairs. If you don't want to call it statement of affairs, you may say statement showing the accumulated funds as at January 1st, 2020. So since you are preparing statement showing the accumulated funds as at January, that means all information that will be used must be information contained in the opening entries. It is only the opening entries that should be used. We don't use the closing entries here. So it is the balances you have as at January 1, 2020 that will be used, or what you have relating to December 2019. You know, the closing balance in 2019 will be the opening balance in January 1, 2020. Please take note of that. Oloibiri Social Club. You want to prepare statement showing the accumulated funds. You have statement showing the accumulated funds as at January 1st, 2020. Remember, I've told you, if you don't want to put statement showing the accumulated funds, I've told you can put statement of affairs. You may choose to write statement of affairs. Please take note of that. The starting point is asset. Remember, I've told you the items that will be used should be the opening balance here. The balances as at January 1, 2020. You are given at December 31st, 2019. Remember, this is the year in question is 2020. The balance in December 2019 will be the opening balance as at January 1st, 2020. The building stood at 30 million. You don't need to charge depreciation. Since this is the balance as at 2020, you don't need to charge depreciation on the building. Depreciation will be charged in the year 2020. This is the opening balance. So you have building stood at 30 million. Building 30 million. Investment at December 31st, 2019 was 60 million. You know the year under consideration, the year 2020. So that means the balance in 2019 relates to the opening entry. So you have it in as the opening balance. Investment, that is 60 million. Let's check the other additional information in order to ascertain if there are opening balances. There are 450 members, each paying annual subscription of 15,000. So this is not opening. Inventories of stationery at December 31st, 2019. So the 2019 relates to the opening entry. So we have 150,000. And at December 31st, 2020 is 270. The opening is 150,000. So that will be used. Inventories of stationery 150,000. Remember, what we are considering are assets. All the items we are listing now, they are assets. Inventory of stationery, opening inventory is an asset. Now back to the note. Note 3. As at December 31st, 2020, the rates were prepaid up to March of the following year. This is up to the following year, that is year 2021. It does not relate to the opening entry, so it will not be used. With annual charge of 1.8 million. So since it does not relate to the opening, so it will not be used. 4. Accrued telephone expenses is outstanding. The amount accrued being 105,000. Sundry expenses accrued at December 31st, 2019 was 210 30,000. This is expenses accrued. It relates to the opening entry. It will be used in the statement of affairs or statement showing the accumulated funds. But since it is a liability, let's leave that for now. What we are considering or what we are using for now are assets. In the receipt and payment account, we have the opening balance of 3,075. Since this relates to the opening entry, so it will be used in the receipts and payment account. So this is an asset. So we have that under assets. That is asset section of the receipts and payment account. Then subscriptions. I told you this is subscription in arrears in 2019. Remember, subscription in arrears is an asset. Accrued income is an asset, but accrued expenses is a liability. So since this is income accrued, subscription is an income, and it is accrued, it's outstanding, that means it is an asset. So we are going to show 3,075 and subscription in arrears as part of our current assets. Cash at bank or cash in hand. So this is the opening balance in the receipt and payment account. Receipts and payments. Opening balance, receipts and payments. And the opening balance is 3,075. That is the amount we have our balance brought down in the receipts and payment account. Then we have subscription in arrears. Subscription in arrears. That is the subscription for 2019. So this is equally obtained from the receipt and payment, and it is 120. So the total of all the assets, 30,000 plus 60,000, that is 90,000. 90,000 plus 150 plus 3,075 plus 120. So we have 93,345. Less liabilities. The only liability we have in the opening entry is sundry expenses accrued, and that is given additional information for, and it amounted to 210,000. So if you subtract 210,000 from 93,345, then you have 93,135. And that is the accumulated funds. That is Roman figure 1. 2. The name of the club or society is Oloibiri. Oloibiri Social Society. Social Society. So you have to prepare income and expenditure account. Expenditure account for the year ended. The year end is December 31st, 2020. So we want to use the vertical presentation. So in ATS exams, you are expected to use the vertical form. So you start with the items of income. The starting point is items of income. And income items are usually found at the debit side of the receipts and payment account. So number one, we have subscriptions. Subscriptions. Let me have that as working number 1. So working 1, so which is subscription. I've told you can use the T format if you like, debit side and the credit side. And if you like, you can use a vertical form or statement form. Then Subscription in arrears is an asset, so you have it as opening balance. Asset must have a debit balance, so you have balance brought down, and that amounted to 120. Then the subscription receipt, as per receipt and payment account. All these were received. 120 plus 6,330 plus 240. These are the subscription receipt. So 120 plus 6,330 plus 240, 6,690. That is the amount received as subscription. This is subscription received in advance. This is meant for year 2021 and it was received in the year 2020. So it's subscription received in advance. Subscription received in advance is a liability. This will relate to the closing entry. Being the closing entry, liability will have a debit balance. Will be carried down here. 120 to be carried down to the debit side, not a debit balance, but to be carried down to the debit side. That is 240. Now let's go through the additional information to find out if there are any other information about subscriptions there. The following information is also available. There are 450 members, each paying an annual subscriptions of 15,000. So subscription due, subscription for 2020, for the year 2020 is supposed to be 450 members times 15,000 naira per members. 450 times 15,000. That gives us 6,750,000. That is the amount that is supposed to be received as subscription for the year 2020. And this amount is the amount you are supposed to show in income and expenditure account, because the amount meant for 2020 is the amount that will appear in income and expenditure account in the year 2020. After our workings, we will get this amount as the amount that will be transferred to the income and expenditure account in the year 2020. Now, this is the amount due for the year 2020, but the amount received is 6,330,000, not up to this. That means certain amounts are still in arrears. So what is the difference? 6,750,000 minus 6,330,000. Remember, 3 zeros are at the top. Minus 6,330,000. So subscription in arrears is 420,000. So subscription in arrears is an asset. So that will be brought down. It will be carried down here because it will be brought down to the next period. Subscription in arrears carried down. That is 420,000. The 420,000, that is the difference between 6,750,000 and 6,330,000. That is what gave me the 420,000. That was reported here as subscription in arrears. So if you sum up this, 420,000 plus 6690. So you have 7110. 7110. Then if you add this, it will be 360. If you subtract 360, it gives you 6,750. That is the subscription that will be transferred to income and expenditure account, which is the balancing figure. 7,110. So what I'm trying to tell you in a nutshell is that the subscription made for that financial year is the amount that will always appear in income and expenditure account. So the arrears here will be brought down to the next period. Subscription in arrears brought down. Subscription in arrears brought down, which is 420. That means this will appear under current asset. This is subscription in arrears advance. Subscription in advance brought down 240. This will be used as current liability in income and expenditure account. So subscription that will appear in income and expenditure account, which is 6,750. I've told you the amount meant for the year is what will appear, and if you go by this working, you will see that the amount meant for the year is 6,750,000, and that is the amount reported in income and expenditure account. Aside subscription, what other income do you have? 6,750,000 will be shown in income and expenditure account. 6,750,000. I've told you the subscription that will be shown in income and expenditure account is the subscription made for the financial year. Now, aside subscription, do we have another income? We have restaurant profits. And there are no additional information that affects the restaurant profit. So you can report that as an income here. Restaurant profit. That amounted to 4,650. 4,650,000. Then we also have investment income. Investment income. There's no additional information that affects the investment income. The investment income is different from the investment. Investment is an asset, but the income on it will be reported as an income in the income and expenditure account. So if you sum up this, 6,750,000 plus 4,650,000 plus 3 million. The total income is 14,400,000. I've told you this subscription, you may present it in a statement form. So you may present it in statement form. If you don't want to show it this way, let me give you the alternative working. Alternative working for subscription. Subscription account. So you start with subscription as per receipt and payment account. Subscription as per receipts and payment. The subscription you have there, 120, 6,330, 240. 120 plus 6,330 plus 240. So that is the subscription as per the receipts and payment. 120 plus 6,330 plus 240. That gives us 6,690. So now, if you look at the question, you have subscription. We said there are 450 members, each pay annual subscriptions of 15,000. 450 times 15,000, that gives us 6,750,000. Again, 6,330,000 that was reported as the subscription for the year 2020. So that means certain amount, since the product of this is greater than the amount reported here, that means this subscription have been received in arrears. It was not received in full. Arrears mean certain amount are due but not yet received. It was not received in full. Subscription in arrears in the closing entry, you add it. You add subscription. So add subscription in arrears in closing entries. we said the amount for the year, subscription for 2020, we said it is 450 times 15,000, and that gave us 6,750,000. That is the subscription due in the year 2020. Subscription received of these 6,750,000, the amount received is 6,330,000. So 6,330,000. So that means the amount received is lower than the amount due. That means certain amount is in arrears, which amounted to 420,000. If you add the 420,000 to 6,690, then you have 7,110. Then of the subscription received in the year 2020, 120 was in arrears in opening entry. That means this was meant for the year 2019 but was received in the year 2020. Because it was received in the year 2020, that is why it was included in the receipts and payment account in the year 2019. So now let's subscription in arrears in 2019, that is in opening entries, which amounted to 120,000. Then we have subscription for 2021, which was received in the year 2020. Subscription in advance. That is subscription for the year 2021. That amounted to 240. If you sum up this, you have 360. If you subtract 360 from 7,110, then you have 6,750. That is subscription transferred to income and expenditure account. So that was reported in income and expenditure account. Alternatively, since you have 450 members and each member is to pay subscription of 15,000 per annum, so subscription that will appear in income and expenditure, subscription that will appear in income and expenditure account will be 450 members times 15,000 naira, the amount each member used to pay, and that will give you 450 times 15,000. That is 6,750,000. So that will equally give you the amount that will appear in income and expenditure account as subscription. After income, the next section is expenditure. So notice this is our total income. So we have expenditure. So the expenditure item, we normally have them at the credit side of the receipts and payment account. So the items of expenditure will be found at the credit side of the receipts and payment account. The number one item there is salaries, 6,240,000. Salaries. There is no adjustment, no additional information on that. So you just write the amount, 6,240,000. After salaries, you have stationery. Let me have that as work number 2, since there are adjustments that need to be made on that. Working 2, which is stationery. Just as when you are preparing trading account, the first item we normally have opening inventory. The opening inventory of stationery. Inventory of stationery at December 2019, no, 2019 relates to the opening entry, was 150,000. So the opening inventory is 150,000. Then the inventory reported in the receipts and payment account is 1.2 million, 1,200. So we have receipts and payments. Receipts and payments 1.2. If you add it, it will be 1,350. Then you less the closing inventories. Less closing inventories. And the closing inventories of stationery 150,000 is the opening. And at December 31st, 2020, we have 270,000. So the closing inventory amounted to 270,000. So if you subtract the 270,000 from 1,350, you have 1,080. That is the amount that will be transferred to income and expenditure accounts. So we have 1,080.
The next item is rates. Rates of 1.8 million is given in the receipts and payment account. Now let's go through the note. As at December 31st, 2020, the rates were prepaid up to March of the following year. So that means rates for January, February, March 2021 was prepaid. That means the 1.8 million paid in the receipts and payment contained the rate for 3 months of 2021, which was prepaid. With annual charge of 1.8 million, the rate for a year is 1.8 million. Now let's have working number 3. Rates. Rates as per receipts and payment. As per receipts and receipts and payment, and that amounted to 1.8 million naira. The rates prepaid. Remember, we used to deduct prepayment. Why are we deducting prepayment? Remember, we want to report the amount meant for the current reporting period, which is 2020. You know, the current reporting period, the financial period is year 2020. You want to report the amount meant for that year alone. So, since it was prepaid up to March of the following year, that is, the following year, the year that followed 2020 is 2021. It was prepaid up to March of 2021. That means 3 months rate were prepaid. So, we want to deduct the amount prepaid. 3 months rate was prepaid. You were told the annual charge with annual charge of 1.8 million. The one for a year is 1.8 million. A year is 12 months. So, times 1.8 million. So, there are 3 zeros which I did not write. That is why I put K. 1.8 million times 3 divided by 12. So the amount prepaid is 450. If you subtract the 450 from 1.8 million, then you have 1,350,000. The amount paid for the current reporting period, this is the rate paid for year 2020. The amount paid for the year 2020 is 1,350,000. But you were told the annual charge is 1.8 million. The amount that is supposed to be paid for the year 2020 is supposed to be 1.8 million. That means rate of 3 months in the year 2020 is still outstanding. So accrued rate, the amount accrued in the year 2020 is 450. So the amount that will be reported in income and expenditure account should be 1.8 million. Rate, that is, amount that will be reported in income and expenditure account. So 1.8 million should be reported in income and expenditure account. So we have rates 1.8 million. So when we get to the statement of financial position, the rate of 450 will be shown as current assets, and the 450 accrued will be shown as current liability in the statement of financial position. Then after rates, we have telephone. Telephone amounted to 300. So telephone expenses, rate is working 3. Telephone, that is working number 4. The telephone expenses paid in the year amounted to 300,000. If 300,000 is paid, now let's go through the notes. Note 4, accrued telephone expenses is outstanding. The amount accrued being 105,000. The telephone expenses of 105 is outstanding. That is accrual. We normally add accrual. So if you add 105 to 300, then you have 405. After telephone expenses, the next item in the receipts and payment is investment. Investment is an asset, so it will not appear in income and expenditure account. So it will be used in the statement of financial position. Then after investment, we have sundry expenses. Sundry expenses. Sundry expenses. The amount paid as per the receipts and payments is 2,775. 2,775. Now let's go through the note. Note 4. Sundry expenses accruing at December 31st, 2019 was 210,000. You know, 2019 is the previous reporting period. It means 210,000 was due in 2019 financial reporting period. Was due for 210,000 was due for payment, but that was not paid in the year 2019, and it was included in the amount paid in the year 2020. That is the meaning. So these 210,000, which was outstanding in 2019 but was paid in 2020, we have to subtract it since it does not relate to 2020 reporting period. So it does not relate to 2020 financial period. So you subtract it. 2,775 minus 210. So that gives us 2,565. If it relates to 2020, we will have added it. No, we used to add accrual. So if that accrual or outstanding, if it relates to the current period, you add it. But it is because it does not relate to 2020. That is why we are subtracting it. Don't confuse it. This is not prepayment. It is accrued. But because it relates to previous period, that is the reason for deducting it here. At December 31st, 2019, the building stood at 30 million. You have the cost of a building as at December 2019, the cost of 30 million naira in the book. And it is required to write up depreciation at 5%. So you want to charge depreciation on building, 5% of the cost of 30 million. So we have depreciation, %5 of 30 million. So that gives us 1.5 million. Then the next item is investment. Investment at December 31st, 2019 was 60 million. This is an investment. Investment is an asset, so it will not be used. So now let's add all the expenditure item. So 6,240 plus 1080 plus 18 plus 405 plus 2565 plus 1,500. That gives us 13,590. 13,590. That is the total expenditure for the year. You now deduct the expenditure from total income of 14.4 million. Then you have 810,000 as the surplus. That is excess of income over expenditure. You have 810,000. Then after we are done with 2, 3, you have to prepare statement of financial position as at that date. You want to prepare statement of financial position as at December 31st, 2020. Oloibiri. Social society. So we want to have statement of financial position as at December 31st, 2020. So we start with assets. The first asset we have is non-current asset. Our non-current assets include building at cost of 30 million. Building, the cost is 30 million less accumulated depreciation. And depreciation of building was calculated at the rate of 5%, and we got 30 million. And that depreciation was the amount charged to income and expenditure account here, 1.5 million. If you deduct 1.5 million from 30 million, you have 28.5 million. After building, the next non-current asset is investment. We have investment at cost of 60 million. Investment cost is 60 million. That is the one at the beginning of the period. Now let's go through the receipts and payment account in order to ascertain if any investment were acquired during the year. In the receipts and payment, we have investment of 3,750,000 that was acquired in the period. So we add it plus 3,750,000. The total investment will be 63 million 750,000. That is the non-current asset we have. 28.5 million plus 63 million 750,000. So the net current asset is totaled 92 million 250,000. After non-current assets, we have the current assets. You have inventory of stationery at December 31st, 2019 was 150,000. This is the opening. And at December 31st, 2020 is 270,000. So you have inventory of stationery. Inventory of stationery. It is the closing inventory that will be recorded, and that amounted to 270,000. Now, there are 450 members, each paying an annual subscription of 15 million. So if you check the working one, remember we said the subscription that is supposed to be paid for the year, or that is supposed to be received in the year, is 6,750,000. We said of the 6,750,000, we said the amount received in the year is 6,330,000. That means 420 million was accrued or in arrears. So we have subscription in arrears. In arrears. That is, this was obtained from working one. Check the additional information number 1, where subscription was calculated. The one for the current period was 420,000. That is the subscription in arrears. Then, if you go through the receipts and payment, the closing balance 1,350,000. That is cash at bank. And if you cut that cash in hand, it is equally acceptable. 1,350,000. That is the closing balance in the receipts and payment account. Then we said certain amount of rate was prepaid. That is rates prepaid. If you check the working, I think working number 3, we said rate of 3 months was prepaid, and we calculated 3 over 12 of 1.8 million. We said that rate was prepaid. So 1.8 million times 3 divided by 12, and we got 450,000. Remember, we said 450,000 is equally accrued, and that will be the accrued one will be shown as current liability. So we sum up the current assets. So we have 450 plus 1350 plus 420 plus 270. Our current asset is totaled 2490. 2490. If you add the current and the non-current asset plus 92,250, so we have 94,740. That is the total assets. Total assets. After total assets, the next section is accumulated funds and liability. Accumulated funds and liabilities. If you go through the requirement, the first requirement, you have to calculate the accumulated funds. So we actually prepare statement showing the accumulated funds as at January. So we got accumulated funds of our accumulated funds amounted to 93,135. 93,135. Then after accumulated funds, from our receipts and payments, we got surplus of 810. From the receipts and payment, our surplus amounted to 810,000. So 93,135 plus 810. Then we have 93,945. After that, we have the current liabilities. From note 3, we said as at December 31st, 2020, the rates were prepaid up to March of the following year with annual charge of 1.8 million. Remember, if you go through the working number 3, the working 3, when we're preparing the income and expenditure account, we said rate of 450 was prepaid that 3 months. Then we also said we have outstanding rate of 450. Rates accrued, that is 450. We got that from working 3, where rate was calculated. Go through the workings on rate, you will see the 450,000 there. Accrued telephone expenses is outstanding. The amount accrued being 105,000. So we have accrued telephone expense of 105,000. We were told sundry expenses accruing at December 31st, 2019 was 210,000. This accrual does not relate to the year 2020. So that is why it was used in the opening entry in the statement of affairs to calculate the accumulated funds. If it had related to 2020, then that means it will appear under current liability. But since it relates to 2019 and not 2020, know the accounting period, accounting year, or financial year of this club is year 2020. So this one relates to the opening entry. So you will not use it under current liability in the statement of financial position. This is subscriptions in the receipts and payment. The one for 2019 was in area in opening entry. This is the one for 2020. The one for 2021 is the subscription paid in advance. That will be reported under current liability in the statement of financial position. Subscription in advance, that is 240. So if you sum up your current liability, you have 450 plus 105 plus 240. We have 795. 795. If you add the 795 to your accumulated funds plus 93,945, then we have 94,740. That is the accumulated funds and liability. Accumulated funds and liabilities. So if you compare this with your total assets, you will see that both are the same. So this marked the end of the solution to the question. Please drop the love emoji, like the video, and also share it with others. Thanks for watching ICAN.